Okay, guys, and we are back recording a live stream. Today is Tuesday, August 28th, 2018. And today we had the NASDAQ over 8,000 for the first time in history. The Dow was back over 26,000 for the first time basically since February of 2018. Remember, we had that huge run-up. Remember, we had that huge run-up in the Dow, and then there was the blow up in the VIX and the leveraged VIX ETF products in February. And so the chart damage took some time to repair, but this phony bull market is back. Now, remember, guys, if you followed my work for years, I have not been calling a crash. There's inaccurate people that are saying that I've been calling for a crash for 10 years or so that I've been doing this. It's not accurate. Initially, when I was learning Austrian school economics, I was thinking hyperinflation, but the more I learned about the system, the more I learned that the people in power could just create trillions of dollars of money and credit, and my views totally changed to stagflation. They were going to keep the asset prices inflated once I got that information in 2014 about the currency swaps, central bank to central bank, all the trillions of dollars from my source at the high-level IMF meeting. Okay, so before we talk about this anymore, I have to do the stupid disclaimer. The stupid disclaimer is that anything I discuss on this live stream, any listener questions that are answered, anything I bring up is for information and educational purposes only. Do your own due diligence. This is not financial advice. Contact your financial advisor and have them, discuss things with them over there. So I want to thank my Patreon contributors. We have gotten a little bit of an increase when you guys heard the story about what was happening to me in the last couple weeks. So thank you for the increase in Patreon contributors. If you do leave me a tip on the super chat, I am probably more likely to answer some of your questions. Again, not financial advice. I can give my opinion, but not financial advice. Sorry, I have to give the stupid disclaimers, but there's a lot of people out there that gamble on these things and then want to blame me. There was a friend on my Facebook who I've known since high school who was complaining about these things. Even though I have disclaimers everywhere, he went out and gambled on gold stocks, way too much money, and then even though he has, I think, 3 degrees, I think he even has a PhD, he's blaming me for his gambling losses, which is ridiculous. Plus, he's been saying that I've been calling a stock market crash for the last 10 years, which is not accurate at all. If you've listened to my podcast, you know I have not been doing that. Okay, so let's get into it today. Today we have the NASDAQ at over 8,000. We have the Dow over 26,000. The Dow is starting to move back high again. It's probably with momentum, not based on any fundamentals. The Dow is probably going to end up at least testing 27,000 in the near future, just because all these momentum players, they don't really care about fundamentals at all. They only care what the short-term charts say. If companies are beating earnings, even if they're fake earnings, and as long as the momentum crowd is a certain direction, if people are still bullish, the trend is still, in the short term, is going to be bullish. They don't care about fundamentals. Plus, you have CNBC. You have them bringing on tons and tons of pumpers. I'm not sure if they bring on any bears anymore. I can only really tolerate CNBC in very, very small doses. And normally, especially lately, they've been bringing on only bullish people on stocks. So I did watch yesterday CNBC for about 5 minutes. They had Josh Brown on, who's a smart guy, but he was listing all the different reasons why the stock market could go a lot higher. And it was kind of, let's just say it was not very well balanced, but he's a smart guy and he's paid a good amount of extra money to go on CNBC, or he's on there to market, his assets under management over at Barry Ritholtz and, pump the market higher. And that helps him make more money either from getting a highly paid CNBC contract or assets under management to Barry Ritholtz's firm. And we don't know what he's doing with his real money because I don't think CNBC has accurate disclosures. But, the stuff on CNBC, I want to put things in perspective here about the stock market. And I'm not calling for a crash anytime soon. So maybe in the near future, if central banks do start taking out more and more liquidity over the next 6 months or 12 months or 18 months or 2 years, then the likelihood for a crash could happen. Okay, we have to see evidence that the central banks are actually, it's more than just talk, that they're actually taking the liquidity out of the stock market. I have the St. Louis Federal Reserve website up. Remember, I did that short video a few months ago tracking the Federal Reserve's balance sheet on the St. Louis Fed website, showing you guys. The St. Louis Fed balance sheet, as of this recording, is down to $4.228 billion. Trillion. So that's from a high of $4.5 trillion. So they've sold over 250 billion with a B in assets. And I'm using air quotes, in assets. So 250 billion on a $4.5 trillion balance sheet, not really an enormous amount. Not really an enormous amount. Where's the comments here? Okay, I'm seeing the comments now. The YouTube thing had a block for some of the comments. I will answer the listener questions kind of later. I have some points, guys, that I want to cover, some current events and points. So let me run through this, and if you have to re-ask your question later in the live chat, I can be here for around an hour. So we're gonna try to do this a couple times a month. I don't know if I can book schedules for things like that. I'm not sure. My life's kind of hectic right now. Things haven't not gone as planned, unfortunately. Wall Street from Main Street. Everything that could have gone wrong with Wall Street from Main Street in the last 8 years since I started basically has, except for the YouTube channel and meeting all these great friends here online. Okay, so let's talk about the stock market more. So the fundamental case for why the stock market is overvalued. You have the Shiller PE ratio. It's over 33. David Rosenberg yesterday on his Twitter, I think he's a pretty smart economist for Keynesian. He tends to not be totally focused in theory. He tends to look at a lot of real world data. And he's talking about, stagflation and how companies are raising their prices now. And yes, companies can pass on some of those price increases to their customers, but that's probably going to hurt a lot of the people on Main Street who are going to get less for more money. So that's going to be stagflationary. That's going to hurt discretionary income. So there is price increases coming in the supply chain through tariffs and inflation, global inflation in the global supply chain. But David Rosenberg brought up on his Twitter yesterday a very interesting point. He said that only 2 of the 11 sectors on the S&P 500 are making higher highs. So what that means is 9 out of the 11 sectors in the S&P 500 that they've divided it up into are lagging. They're not doing well. So if you're a bullish person and you want to spin that, you would say, oh, well, those companies are going to catch up. Well, I don't know. Maybe some of them. But I would say that most of them probably would not catch up, that they're not going to be doing probably well over the long term. They're struggling with the current global economic environment, with what the central banks are doing, with maybe some of the stuff that President Trump is doing if they're here in the United States. We're going to talk a little bit later in the live stream. I'm going to give a little bit of analysis over the U.S. and Mexico bilateral trade deal. I think a specific sector is going to be hurt more than the other. We'll talk about that. But again, it's a trading idea, not financial advice. Don't go out and gamble. Do your own due diligence. Go read some articles on Seeking Alpha. Speak to your financial advisor. Yeah, and I mean, guys, with the stock market, it's really funny. So basically since the FASB changed the accounting rules and the banks were allowed to mark to model, and the central banks went in with bailouts and TARP and QE and all these things, basically if you were David Einhorn or Kyle Bass or Hugh Hendry or any of these other, brilliant financial professionals or value investors or brilliant stock pickers, you've underperformed the stock market. If you did no research whatsoever, if you read no investing books, if you didn't listen to this podcast, if you all you did was at your job, you didn't do anything else but just put a little bit of extra money every couple months into your stock market index fund since the 2008 crash, you did better than a lot of the investing professionals. So if that sounds like it's sustainable, I probably want to have a conversation with you. or maybe you're a comedian. Maybe you're sarcastic. Maybe you're just sarcastic then. Because if you think you're a genius, that you're a better long-term investor than Kyle Bass and David Einhorn and all these other guys, I would totally disagree with you. I think the central banks and the banks getting their accounting laws changed have really bailed you out. And, all these share buybacks with debt. I mean, there's so many different reasons. There's tons of flight capital from Europe and Asia that have come into the U.S. markets. So I'm not calling for a stock market crash, but I'm saying that the stock market is not going higher on fundamental reasons. Let me provide you something else. I'm going to attach a link to this article in the information section of this live stream after it gets recorded and YouTube puts it in an archive. So there was an article that former hedge fund manager Jesse Felder, who I had on a month or so ago on my podcast, was talking about on Seeking Alpha. This is from Jeffrey Cavaney, and he says the S&P 500 median price to free cash flow ratio is now almost 35. So basically, In other words, investors who are buying US stocks at the current price levels, these are large cap companies, are valuing the typical large cap company at almost 35 years worth of free cash flow. That is from now until the year 2053. So I would argue that people who are buying stocks now are not thinking long term. They're just thinking, you know what? I can make money today, can make money tomorrow. I can make money by the end of the week, maybe the end of the month, and that's about it. Because if you are buying, if you talk to anyone who has a good track record, long-term investing, who buy stocks at these valuations, you know, normally over the long term, things do not do well. And like I said, a lot of people don't like the Shiller PE ratio, the cyclically adjusted one, but it's just one valuation metric to look at. That one's at 33 times earnings. And the other one I just mentioned is at around 30, almost 35. So basically, the conclusion of this Seeking Alpha article, let me just read the summary here, is that basically a lot of the stock market, this is a funny part. He says the entire stock market is being valued like they're all booming growth stocks. And I think a lot of this, guys, is based off of how desperate, from talking with a lot of people who listen to my podcast, or just people in general who are trying to learn how to invest, is that a lot of people are looking for income. And so they're willing to pay a really high valuation on a stock market for a large cap dividend stock that has no growth. So they're willing to pay like Campbell Soup valuation. I don't want to pick on Campbell Soup too much, but you know, last time I looked at Campbell Soup, it was over 25 times earnings, but it had a dividend yield, and people were willing to pay for that, and the revenues were declining. So they were using financial engineering with these artificially cheap share buybacks to move earnings higher. But I've talked about how that's like, you know, rent seeking. Alan, NASDAQ over 8K. Thank you, Fed, Treasury, and PPT. It's a combination of factors, Alan. So you have flight capital coming in here. You have a lot of money from Asia and Europe that is coming in and buying large cap dividend stocks too. And then you also have the share buybacks as well. And, you know, you also have these stupid trading computers. There's very few human beings now managing a lot of money, day trading. There's, you know, a couple computer programmers, and the machines, the algorithms are doing the rest. And so they don't really care about fundamentals. They think that they can get to the exit quickly like everyone else. The thing I didn't mention in the Lance Roberts interview that I covered on the last live stream from Chris Martinson was that Lance Roberts said, well, I know the entire stock market is overvalued, but I can't be in cash as a money manager because people won't pay me fees. And so I think that attitude, that paradigm is very, very common for professional money managers on Wall Street, or whether they're managing money in Texas or anywhere else. And so, you know, they're hoping that they can collect fees while the market is going up and that they can get out in time. But the thing is, we know what happened, you know, in prior stock market crashes when everyone tries to leave things quickly. Okay, guys, so when I take breaks, I will be doing one of three things. I'll either be taking a sip of water, I will be looking over your comments in the chat, or I will be looking at my notes so we can kind of stay on point here. Okay, so I'm checking my notes to see if I mentioned everything that I wanted to mention about the stock market. Looks like I mentioned everything. Well, CNBC is pumping. CNBC is pumping it like crazy. I'm not sure if they even allow bears on for more than a couple minutes now. And Barron's has kicked out the people who aren't permabulls on the Barron's roundtable. You have Fred Hickey, who I think is brilliant. He's not always right, but he's a brilliant guy. You have Phil Zulov, who was kicked off the Barron's roundtable. You have Dr. Mark Faber, who was kicked off the Barron's roundtable. And I would call those guys, you know, neither bull nor bear. I would just call them more balanced. I'm not trying to be bullish or bearish. I'm trying as an analyst to objectively look at a market, bullish or bearish. So I'm saying in the short term, the stock market will probably go up, but not on any fundamental reasons. In the long term, I think there's a lot of problems. The dollar index, though, has had a little bit of a correction. I'm looking at it right now. It's under 95. It's at 94.73. So the dollar index is struggling to stay above 96. Maybe Secretary Mnuchin or Trump are complaining about this. Maybe the emerging markets are complaining to the Treasury Secretary. Maybe foreign central bankers or foreign governments or foreign banks are complaining to Secretary Mnuchin or Jerome Powell that the dollar was getting too strong, and maybe they came in here. We know that the currency markets, guys, are very heavily manipulated. It's the new normal now. It's the new normal. There are no real free markets anymore. As Chris Powell from GATA says, there's no more markets. There's only manipulations. But a lot of people are still trading markets and still making money. Okay, so let me check to see if there's any questions about the stock market here. James Ryan, short squeeze that is happening in the coming day. Short squeeze on what? Short squeeze on silver or the stock market? It's not a complete question. Force majeure. Hi, the quicker it climbs, the quicker it can fall. This is correct, especially with these high-frequency trading algorithms, which are fake liquidity. They're not real liquidity. The lie that Wall Street and the high-frequency traders and the exchanges have sold to regular people on Main Street is that these HFT machines create liquidity. They do not create liquidity. They actually remove liquidity because they spoof and they pull bids on asks. On the level 2 quotes, what they are doing is illegal, pulling bids in and out. They should go to prison. Instead, they get rebates from the exchanges to make more money. The SEC believes whatever the HFT trading algorithm lobbyists tell them. And did you hear that Bart Chilton, who was anti-HFT trading, guess what? To make more money now, to feed his family, probably to make more money, he went from the CFTC and saying that silver is manipulated. Now he's the chief lobbyist in charge of protecting HFT trading. Rhino Nation, price drop, then huge bull run. What are you talking about? Are you talking about silver? Are you talking about the stock market? I'm not sure what you're not being specific enough. Alex Grant, what 2 sectors are higher? If you can see the picture, one of them is tech. Financials, the financials were lagging a little bit. It could be financials. I can't remember off the top of my head. I'd have to look that up for you. David Rosenberg has it on his Twitter. So if I remember correctly, you were in tech. So you can follow David Rosenberg, the economist on Twitter, the guy from Toronto. He's actually the most balanced Keynesian I've met on so far out there, because rather than just focus to the blind ideology and the theory of Keynesian economics, he tends to actually focus on real world data. And I think, unlike most Keynesians, he doesn't ignore reality. Although, he does stick to some of the Keynesian stuff that credit, that demand drives the economy, that's good, and credit growth is good. As an Austrian, I don't agree with that. I think it's dangerous, for just demand. If you follow Austrian school economics, you know what I'm talking about. I don't want to go into a detailed explanation. I'm going to see people complaining in the comment section that I didn't explain it well enough. Well, I don't have time to explain every single thing. I had people complaining when I was doing a live stream 2 weeks ago, telling you guys my story, sharing my story about what happened to me with the Virginia securities investigators, that I didn't spend enough time talking about the dollar. I mean, look what happened in my real life, and people are complaining they didn't get enough free stuff on YouTube. Definitely not a Patreon contributor. It's ridiculous, man. I work my ass off and people still complain. But I guess this is what happens on social media. Alex, just buy SPX and close eyes. Well, I hope you know how to hedge. I hope you know how to hedge, buddy. I hope you know how to hedge. There will be at some point in the next couple years, if the central banks do take enough liquidity out, there will be either a bank failure, a large one, or there will be some type of liquidity event or credit crisis, and that will cause some type of cascade event, contagion, domino effect, and that will cause, I'm not giving an exact time frame, but sometime in the next couple years. These central bankers are not perfect. They do make mistakes. You cannot paper over everything. One of those examples is China. A lot of these China bulls claim that China's fine. All their debt is internal. No problem. They'll just devalue the RMB and that'll fix things. There are real world problems to doing things like devaluing your currency. Number one, if you're a Chinese small business owner or you have savings in RMB and people devalue, you're not going to hold all your, if you have any common sense and you've been through a devaluation before, you're not going to keep all your currency in that one currency. You're going to be moving it. There's going to be flight capital. So there was people saying that, China's going to easily devalue past 7 on the exchange rate, RMB to the dollar. Well, we'll see. We'll see. Because if China does it too quickly now, there could be civil unrest. So, and the Chinese government is worried about that more. The Chinese government is worried about employment, making sure that men in my age demographic or younger, Generation Z, who could cause civil unrest, have a job. They have food, a job, maybe a place to rent and a girlfriend. Although China has a demographic problem, but that's a, discussion for another podcast. And the other one is, this internal credit thing. This internal credit thing, debt is debt. So at some point, the Chinese government's going to have to deal with this. It's probably going to be, because they own their banks, it's probably going to be either they wipe the debt clean or their bailouts or they devalue the currency. But there's a lot of China bulls out there that are claiming that China's going to have no pain from all their credit bubble. It's over $40 trillion, guys, and it's growing even more. And they tried to shut it down, and they can't. And then their state-owned enterprises have an enormous amount of U.S. dollar-denominated debt. It's over $1.7 trillion in dollar-denominated debt from their state-owned enterprises. And China can't just print away that debt because it's dollar-denominated debt. And that's a large chunk. When you add that with the One Belt, One Road, the $1 trillion commitment, which I don't think they're going to get an economic return on. I think that's a Keynesian central planning, FDR, massive scale FDR, Make Works Jobs program. When you combine that $1 trillion committed to the One Belt, One Road, plus the $1.7 trillion that China's going to have to cover in U.S. dollar denominated debt from their state-owned enterprises, that's already a large chunk of their foreign exchange surplus, their trade surplus. So yes. And, plus you have this, we don't know how this trade war with President Trump and China is going to end up. We just don't know. Oh, Phil's on here. What's your favorite podcast and why is it Kennedy Financial? Phil, it really depends. It really depends on what I want to learn. So I listen to the McIlvaney Weekly Commentary every week. I haven't missed an episode. I even listened to the Richard Duncan one. Although I think Richard Duncan, some of his solutions are kind of ridiculous with the creditism stuff. With that, basically, that the world should just keep on actually increase the amount of money in credit. Should go into tens of trillions, hundreds of trillions. He's an interesting guy, Richard Duncan. He says, that capitalism ended many, many decades ago and that we have creditism now and that we should not allow financial crisis because that'll, create civil wars and people die and stuff like that, and that we should just create trillions and, hundreds of trillions more and just spend it on new technology, try to spend it better than it was spent in the past. 2020 cool cat. NASDAQ, 8K, everything is awesome. That's funny you bring that up. I actually was debating playing the Everything is Awesome song, but I didn't want a YouTube strike against me. So I played that on a past video, like at the end of the video, I played the Everything is Awesome song from the Lego movie. I think it is apropos though. That was good you noticed that. I guess we're thinking all on the same page there. Okay, so we covered China. So no major RMB devaluation yet, but China, the people in power in China at the PBOC and China's Treasury Department Ministry are going to have to weigh whether or not to do a RMB devaluation. I think there will be at least one really big RMB devaluation in the next 5 years. If you're a hedge fund manager, you can't trade on that because normally hedge fund managers need something sooner than 5 years. But I think China will do an RMB devaluation, but they run the risk if inflation heats up too much that there's civil unrest, that there's huge capital flight leaving China, etc. So I don't know how China is going to deal with this, but I would say on educated guesses and probability that they're probably going to do an RMB devaluation, a big one, at least one big one in 5 years or less. And that's the highest probability thing that they will do first. They can, because they own 90% of their banks are state-owned, they can technically wipe the debt. But what about the people that bought some of that debt? So I guess they would have to make them whole. If it's like a Chinese investor or Chinese saver or a Chinese business that bought some of that debt. So I don't know. We'll see. Okay. So let's go to crypto. Okay. Last live stream, we had a comment in at the end, wanted my opinion on cryptocurrency markets. So I'm going to really quickly move over to coinmarketcap.com. So as you guys know, I'm just a student of this. I'm not a technology expert. I'm actually a technology idiot, but I am learning. I didn't know anything about technology until 2013, and I've been reading a lot of technology books and articles since then. I did find Ethereum before a lot of other people because I was looking at YouTube videos and reading articles and trying to find experts on what could be potentially the next Bitcoin. I did make a profit on Ethereum. I got out with a 9 to 10-fold gain. Some of you guys also got out with me. Unfortunately, Ethereum went a lot higher. There was one person harassing me on Twitter. He still brings it up when I do X22 report interviews. He still calls me a moron in the comment section. I had to block him. Well, I think probably he not only did he ride Ethereum all the way up, way higher than I sold it at, but he also probably rode it all the way down. So, I'm an idiot for selling Ethereum too early. But I look a little bit better now, even though it was a mistake. I look a little bit better now getting out of Ethereum and, just watching the mess kind of that is crypto for right now. we're in a consolidation period in the crypto markets. I am not a technology expert. So what I will tell you guys is that a lot of these altcoins, if the markets do not in the next year or two start to rebound, people are going to give up on some of these altcoins. We're already seeing that to a certain extent. But I think, Ethereum has headwinds, and the headwinds for Ethereum, you could also spin this to long term. This could be bullish, but in the short term, short to medium term, this is going to be bad for Ethereum, is that almost every major country and government is cracking down on initial coin offerings. So the craziness that was the initial coin offering market, that's going to be, for a lot of governments, it's going to be big crackdown on Ethereum. It's going to be big crackdown on Ethereum. So there's going to be less demand and less volume probably from Ethereum, but the initial coin offerings that do get through are probably going to be safer long term for a lot of like venture capital or angel investors, tech people. Regular mainstream people who don't have a high risk tolerance should stay the hell away from these altcoins and from initial coin offerings though. Okay, not financial advice, forward looking, just my opinion. Bitcoin price, my opinion on Bitcoin price is interesting, and that's just studying a lot of markets and supply demand. So I know there's a lot of people who listen to my podcast and absolutely hate Bitcoin, absolutely hate it. But what I would say, we're at a Bitcoin price right now. Bitcoin has rallied. Bitcoin is over $7,000 a coin, $7,048 a coin right now. And I would say that Bitcoin is putting in a bottom, and that is because if you believe in the long-term future of Bitcoin, then the miners of Bitcoin, the commercial scale miners of Bitcoin, for a certain amount of time, they can run a loss or not make any money verifying transactions on Bitcoin. But they have to be able to make a profit at a certain point. So that's why I think you're seeing a lot of this back and forth consolidation around the marginal cost of verifying transactions, aka mining in air quotes, of Bitcoin. So that's why Bitcoin does not stay below, $6,500, $6,000 a coin too much. Because if it did, you would see potentially those Chinese Bitcoin miners that use debt to buy their rigs, if they didn't pay back the debt for their rigs yet, they would potentially either stop mining and or go bankrupt. And so we haven't seen that yet. This is not investment advice, obviously. You need to watch the current events, the news stories on like CoinDesk and some of the other crypto news sites. Look for large-scale commercial miners going bankrupt. And if we do see the bankruptcies, that would be another sign that the bottom potentially is in. And that's similar to a commodity. So that would actually be healthy for the market. The speculative fervor would be totally gone. So all those miners that were making tons of money that could borrow cheap debt, mining Bitcoin at commercial scale, they would be out of the market. They would be wiped. In terms of research though, for Bitcoin, I would tell you though, there's some interesting things that caught my eye lately. On the Quote the Raven podcast, Christopher Irons, my friend, who has a really good channel. He hasn't gotten censored yet by YouTube. So far he's lucky. His channel is growing really, really quickly. In the last couple months, he's interviewed Wall Street, big shot investor, and short seller Mark Cohodes twice. And Cohodes has some really interesting analysis on overstock. Okay, so it's really, he lays out a full argument for why, in his opinion, not financial advice, he thinks that overstock could go up fivefold or more. And he says that basically T0 and Medici Ventures is worth a lot more than the market cap of overstock, that a lot of people on Wall Street hate Patrick Byrne, and they're not shorting overstock because of its assets. They're shorting overstock because they hate Patrick Byrne and they want to hurt Patrick Byrne. And so, definitely go over there and listen to, there's 2 interviews now. There was another one done in the last week or so with Cohodes, because overstock, there was an announcement from a Chinese technology venture capital firm, a big investment into overstock. And the stock initially, I think, overstock popped about 30%, and it was a short covering rally, huge short squeeze, and then the stock sold off. So the shorts are kind of back in control there, but long term, I think overstock has some good revenues from the retail business, but the rumor is they want to sell their retail business for like $1 billion or $2 billion. But there's a good argument, I would say, that Mark Cohodes is making about the long-term prospects for overstock. Again, not investment advice, but I think the argument has merits. And so, some of these other Bitcoin miners like Hive Blockchain Technology, MGT Capital, they do have a lot of potential here. And from what I remember speaking to people at the company the last year or two, is that they have their debt paid off. So they may be currently mining Bitcoin or Ethereum at a loss, but they don't have debt problems. And they're also backed by really, really big name investors. Like Hive Blockchain Technology is backed by Genesis Mining, and then also like Frank Giustra and Frank Holmes and some other really big names. And then MGT Capital has some really big name investors as well. I'm going to take a swig of water real quick. Okay, I'm reading through the comments section here. You know, there was an interesting piece of news story. I didn't plan on talking about gold and silver, but real quick, was that Vanguard's was collapsing their $2 billion or $3 billion natural resource stock fund. So normally that's also evidence that, you know, we're in a bear market and it could be capitulation. So in the short term, it's not going to do anything. It's not going to prevent gold and silver from falling. Although, you know, the dollar index has not gotten above 96. It hasn't held yet. So gold and silver are, I think gold was at 1207 last time I looked today, and silver is at 1467. So gold's back down to 1200. So gold was at 1207 about 20 minutes ago when I started this live stream, back down to 1200. Silver's at 1467. So, you know, people are still worried about the dollar's impact on that. Long term though, I would really love to see some miners go bankrupt, especially the high-cost ones. If we did actually see miners go bankrupt, especially the copper miners, there's so much byproduct of silver that should not be online. If we saw copper miners go bankrupt, and I think the copper miners are going to sell gold and silver streams first before they go bankrupt, they'll do that before they go bankrupt. But if we do see copper miners that have a lot of silver byproduct go bankrupt, that would be long-term bullish for silver. That would be signs that the bottom is starting to that we have a really strong bottom, in my opinion. Okay, checking my notes again. Covered the stock market, covered China, covered crypto. I will check your questions towards the end. I'm going to make sure I cover the topics here. And, okay, so the EU, new current event story, the EU is hedging its bets. So the EU wants to come up with a new trade deal with the US, but they also want a new alternative payment system to SWIFT. So it sounds to me like the EU is trying to cover their bases here. They're trying to hedge their bets. So they want to make nice with Trump and do a trade deal where Trump can call it a win, and then that'll help the Trump Republicans in the midterms and maybe help Trump get reelected in 2020. And European politicians can then go to their base and say, well, this was good for Europe based on these things. But because they know, you guys know, the evidence is there that the SWIFT payment system, and I think one of Putin's financial ministers even mentioned this, that the U.S. had weaponized the SWIFT payment system. Alex, is FNV a value below 70? FNV is a very quality company. It always sells way above its NAV multiples, net asset value multiples, and book value. It always sells way above book value because almost all of its assets, over 80% of its assets that is purchased, are all cash flowing. So the market pays a premium for this. So if you want to pay a premium, the odds of Franco-Nevada, say, going below 30 are probably pretty low. We'd have to have a 2008 or worse crash. If that does happen, I would back up the truck. Again, this is not financial advice, just my opinion. So maybe if you want to buy a little bit of Franco-Nevada on this dip, maybe buy a little bit. But if it does, again, not financial advice, if it does drop below, if we do have a 2008 market crash, Franco-Nevada would be a superb buy, along with Wheaton Precious Metals, Royal Gold, Osisko Gold Royalty. If you want to take more risk, I think Sandstorm Gold has the most growth. But Sandstorm is the riskiest out of the 5, but I think they are the cheapest out of the 5 as well, because they do own a lot of assets, but I think about 30% of their assets are generating cash flow right now. So the market is pricing a lot of the assets they have purchased at basically zero, in my opinion. Sandstorm's trading at a very cheap operating cash flow multiple, and there's different ways to value companies. So you have net asset value, NAV multiple, you have operating cash flow multiples, you have all these different ways, price to sales, etc. So there's all book value, there's all these different ways to look at companies. Okay, we got off topic here. Sorry, guys, we got off topic. I'm going to do the listener questions at the end. Try to stay on point here. Okay, we covered the EU. So the EU is hedging its bets because the SWIFT system, the U.S. has abused the SWIFT system. And a lot of countries are upset about this. So we've had, the current event stories for the last couple of years that Iran and Russia and China have tried to set up an alternative payment system. I don't think it's that popular yet. Some of my buddies just sent me some more stuff that there's going to be more stuff with the Petro Yuan and gold exchange. We'll have to see. I don't think it's making a huge dent yet, but, we'll see what happens in the near future. Okay, U.S. and Mexico bilateral trade deal. So I think that this U.S. and Mexico bilateral trade deal, I think it's going to hurt the U.S. car companies. So they will figure out some ways around it, but there's going to be problems that the U.S. car companies run into. So they have a trade-off. They have some tough decisions to make. First of all, I've heard that some of the car executives in the U.S. have called what President Trump did basically Soviet-style central planning, with trying to force parts manufacturers where 40-45%, there's some really weird technical stuff inside the U.S.-Mexico bilateral trade deal on cars, where 40-45% have to be of the parts have to come from auto workers who are making at least $16 an hour. And so U.S. auto manufacturers are very upset about this. They can try to pass on cost increases in cars to their customers here in the U.S., but I don't know if car customers, even though a lot of cars are purchased on credit, I don't know if the customers are going to be willing to pay more. So what the car companies may have to do then is cut corners somewhere else. Maybe they offer a car with less features. Maybe they offer a car with lower quality materials, although the argument can be made that a lot of cars nowadays have far less quality materials than they used to even decades ago. Because, look, the cars now are like plastic and aluminum compared to, steel and stuff that was safer in the past. Although, now we have airbags, but I would much rather be in a steel frame car. I think it's a lot safer as opposed to a car that's mostly made of plastic and aluminum, even with the airbags. I think the cars nowadays are basically intentionally made to, if you're in even a little accident, fender bender, basically the car breaks. And so the car company, you have to get another car. The insurance company gets to make an insurance claim and charge you higher fees. So I think the U.S. auto companies are going to be somewhat hurt by this U.S.-Mexico bilateral trade deal. I don't think this is going to be potentially good for them. Maybe for U.S. workers, this is going to be good. Like I said, with anytime there's a new trade deal or a trade war or something, there's always going to be specific groups that benefit and a lot of people that also get hurt as collateral damage. So I think the car companies, maybe some of these car companies have good warranties. Maybe they're going to offer less warranties now. So to make up for their higher costs on labor and parts for some of the cars with this new U.S.-Mexico bilateral trade deal, some of these car companies the customer is going to get less value. They're not going to get the full warranty. It's going to be a partial warranty. The warranty is not going to be as long, or I don't know. But I think there's going to be unintended consequences. That's the Austrian school economist in me, having read Bastiat and Henry Hazlitt. Okay, swig of water time. Okay, Jerome J. Powell, Jackson Hole comments. So the comments that Jerome Powell made at Jackson Hole, it seems like he wants to do more rate hike increases, but we know from financial history with past Fed chairmen, whether that was Alan Greenspan or Paul Volcker or other Fed chairmen, that the more rate hikes they do, we have a credit, consumer credit, debt Ponzi global economy now. And so raising interest rates too much too quickly, even though we're only doing quarter-point rate increases, will eventually break something. Maybe it's emerging markets. We don't know. But we do know from financial history that it will eventually break something if he continues to increase interest rates. But he's probably raising interest rate increases to protect the ability for the U.S. Treasury to raise more money, because we know that those budget deficits will blow out, and we know that in the near future, the U.S. Treasury is going to have to raise a lot more money. And so far, it hasn't hurt the dollar yet. So there's that Dick Cheney school of thought there. We know there's a lot of people in D.C., a lot of Keynesian economists that have this belief. Trump is taking advice from supply-siders that deficits don't matter yet. They are. There's a lot of people that believe this. I don't believe this. Many of you listen to this podcast don't believe this. But there are a lot of people in key economic and political decision makers who believe that deficits don't matter, that they can make the promises to buy votes or stay reelected or help their buddies out so they can get a nice cushy job after they're out of political office or get a lobbying job or whatever, and they don't care about the long-term ramifications for their citizens and their country. Okay, covered that. Okay, so the last part, the last couple current events I want to talk about are not actually investing in the economy. They're just crazy stuff that's going on in our world. Did you guys see what happened to True Pundit, the story he released yesterday? Who follows True Pundit? Who follows Thomas Paine and True Pundit? The story he disclosed yesterday was scary, what the FBI did to him. Damn. Supposedly he has a new book coming out where he's going to tell all. He said it's better if he releases everything publicly. Wow. I'm going to look forward to that. Hopefully there will be an audiobook. I reached out to Daniel McAdams from the Ron Paul Liberty Report. Hopefully they'll interview him and he'll speak about his story. That's some crazy stuff, man. They came at his kids. The FBI came at his kids with like fully armed automatic rifles. His wife and his kids. Keith Ellison cover-up by the mainstream media. So the people who are outraged over how the mainstream media has, covered up for the Clintons and covered up for Keith Ellison, this is why, as for me, I love history. This is why history is important. Go back and look. The mainstream media, this is not an exception to the rule of what the mainstream media has been doing to cover up for Democrats, okay? The mainstream media has been covering up for Democrats for a very, 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 very long time. The stuff that LBJ, Lyndon Baines Johnson, President LBJ, even when he was in Congress, he did some really bad stuff. The stuff he got away with was, as president, was bad. I'm not sure I can even mention it on this podcast because then I'll get flagged for saying really nasty stuff. There's books out about this, some really, really nasty stuff. In the Me Too movement, I'm just shocked that no one's going back through history and talking about how all these Democrat politicians got away with some really deplorable stuff. As bad as the stuff LBJ got away with was as bad, if not worse, than anything Bill Clinton or Hillary Clinton has gotten away with. Really, really bad stuff. Oh, Ben Firthy, McCain was a psychopath. Yeah, McCain was a war hawk. Yeah, crazy. The pictures of him with the ISIS guys, no one on the mainstream media brought that up. It was like a fake, the mainstream media was like fake, like paying respect for him because they were bashing McCain. I mean, if I remember this correctly, they were saying the nastiest stuff about McCain when he was running. And they were going after Sarah Palin bad too. I mean, the stuff they were saying about McCain and Palin was absolutely horrible. So for a long time, I don't remember this. Maybe I was too young. The mainstream media, I don't remember them saying, there was also no social media where you had like crazy journalists who are Marxists like saying the nastiest stuff about Republicans or libertarians or men in general. But I don't remember the mainstream media up until about 10 years ago saying really, really nasty stuff. I just don't, I mean, like, of course they disagreed, but I mean, I remember there being a lot more polite discourse or polite disagreement. McCain had a lot of problems. He's caused a lot of damage to the United States with the debt problems and the war. Thank God that we didn't attack Iran because McCain wanted to. Although now John Bolton wants to. John Bolton, maybe Trump has him in check, I don't know. But John Bolton has said some really crazy stuff about Iran and Venezuela. Okay, did you guys see the Hillary Clinton, the China news? That stuff was incredible too. The funny thing, guys, is that probably almost every government, Israel, China, Russia, so many other governments, even U.S. allies, all have copies of Hillary Clinton's emails. And here's the funny thing. So James Comey, when he was FBI director, he claimed that there was no intent for Hillary Clinton. Okay, well, read the U.S. Espionage Act. Whether you're a first-year law school student or you're just a layman or you're an experienced lawyer, if you read the U.S. Espionage Act, you know that it's this is more for law students or lawyers and I was a law school dropout, and I took criminal law for my first semester of law school, and I did well in that class, strict liability law. And so strict liability law, you do not have to prove intent. So there's a lot of people saying the U.S. Espionage Act should be gotten rid of. Well, it's still in the books. And so James Comey said that Hillary Clinton didn't have intent for, her private server and her emails and all this stuff. And reading the U.S. Espionage Act, it doesn't matter, okay? his excuse that Comey gave was total BS. Comey's a lying weasel. Comey should be in prison now. He should be getting charges. Instead, he's selling books and probably going to be making a lot of money as a lobbyist or whatever. It's totally ridiculous. Totally ridiculous. But Hillary Clinton should have gotten charged. All you have to be for a strict liability law, as the U.S. Espionage Act says, is just grossly negligent. You do not have to prove intent. So she violated the act. It's just all the people that are in the Department of Justice for years now, really since Bill Clinton was president. They did not, this started when Bill Clinton was president, and I've lived outside of D.C. about that long, so I would know that the Department of Justice intentionally does not hire any lawyers who have ideological diversity. So if you're a Republican or a Libertarian lawyer, you cannot get hired by the Department of Justice and get through the hiring approval process. They have hired basically the same type of stereotype, background. It's kind of like what Charlie Kirk says. It's like ethnical diversity, but it's not. There's no diversity whatsoever of ideology, and that's how most of the people inside the Department of Justice are, unfortunately now. Even with President Trump, for him to get a lot of Republican lawyers in there, getting through the approval process of Congress and even the bureaucracy system getting the approval, that's going to be almost impossible. It's really, really sad. And yeah, it's been this way for a long time. So the Department of Justice, Bill and Hillary, when they were in the White House, they came up with this plan that they were going to get rich after they left the White House, and they needed people to cover for them. So they installed all these lawyers that were their friends in the DOJ. This is how corrupt and criminal the U.S. is. Okay. Oh, Sarah Carter, last couple stories, and then we're going to get to listener Q&A. I'm going to go back through the chat, guys, and start reading your questions and answering some of them. Remember, if you tip me for Super Chat, I'm more likely to answer your questions. Okay, so the FBI whistleblower. Sarah Carter just reported that it was actually an FBI whistleblower who has been telling them that all this stuff was planted and all this stuff was faked, and man, it's crazy. And finally, an FBI agent with conscience came and released the stuff yesterday. It's very frustrating. President Trump needs to do two things to fix things right away. I was telling my sister this yesterday because my sister's learning about how corrupt everything is, and she's just shocked. She's about 8 years younger than me. But anyways, though, Trump needs to do two things, in my opinion. First, he needs to get rid of Sessions. Sessions is he's either being blackmailed, he's totally inept, maybe he's going senile or something, or he's just dumb and lazy now. I don't know. He needs to get rid of Sessions and put in an effective attorney general. That's the first thing. And then that can clean up the Department of Justice. Not someone that'll recuse himself. And then after that, Trump has to do this. I don't know if Trump is aware of this. I hope he is. I hope someone's telling him. I know on Twitter this has been going around. He needs to declassify these documents. And there can't be all these Sharpie pens redacting everything but a couple lines. He needs to redact, thousands and thousands of all these different documents for the American people, whether you're Republican or Democrat, Libertarian, and, even a Marxist, to go and look at and objectively and decide for themselves what has happened to the rule of law in this country. The documents need to be declassified. There cannot be tons of Sharpie lines redacting them. Judicial Watch, props to Tom Fitton. They have been fighting this good fight for years, suing the Department of Justice and the FBI, and they have managed to get some documents out, but almost all of them are heavily redacted. And, no one would listen to them initially, although the last couple of years before and during the 2016 election, they become popular now. But they've been fighting this fight for a very, very long time. And they were talking about how the FBI and DOJ were screwing them over, for freedom of information and all that. So we need more transparency in government. We really do. And the best thing Trump can do is declassify all these documents, thousands and thousands of them. I don't know if he's going to do it, guys. But, if he doesn't do it, it's the Democrats could steal more seats in the midterms. And if the Democrats get enough seats in the House, there will be impeachment charges brought. I think they will die in the Senate. I don't think it will fully make it, but you never know. A few of these neocons or rhinos could flip. If there's enough damaging stuff out there about Trump's family, then they could potentially flip them. I hope I'm wrong about this, but I didn't vote for Trump, as you guys know. but I also don't want to see the president fully impeached and all this stuff. It would just create a disaster. We already have problems in this country with moral decay and corruption and there is no rule of law. It would make things even worse. The bureaucrats here in DC would be fully in charge of things then. Fully in charge of things. And that scares me. Because the bureaucrats here in DC, they already have way too much power. If you've read Atlas Shrugged, Wesley Mouch. There's way too many Wesley Mouches here. Way too many. There is literally thousands of them. Making over $100,000 a year. Can't be fired, even if they commit a felony. Cadillac health insurance plans. Acting like they're the most very, very powerful. It's a scary thought. Okay, well, it's one more point I just wanted to make up. So, I'm just noticing, guys, that how bad things are getting here in culture, here in the United States. Like, there are literally, I'm sure, for our listeners here in the United States, things are getting really, really scary. There are literally, it's happening every day now to me. There are literally people running red lights all the time. There are people blowing through stop signs. I'm walking my dogs, in the afternoon or in the morning, and there's people who go through neighborhoods at full speed, blowing through stop signs, don't care, checking their phone, speeding up, don't look. There are people running red lights. People don't pick up dog poop. People don't take responsibility for any of their stuff. I mean, society, guys, here in the United States, adult men and women are not taking responsibility for their actions. Society I'm sure you guys can type the ways too. Society is decaying. I don't think things were quite this bad 10, 15, 20 years ago. They've gotten worse and worse and worse. But things are decaying very, very rapidly. The U.S., if it is not already morally bankrupt, a lot of people in the United States, a lot of American citizens are on that path. And, this is before, and this is why, the people in power have gotten away with so much. Because the ends justify the means, right? There's tons of people, like more than half the United States adults hate Trump, right? Get him anyway. There's a lot of people that say the ends justify the means. We're going to get him any way we can get him. Doesn't matter. Manafort, he probably did evade taxes, but he did that stuff 10 years before he worked on the Trump campaign. But if you listen to the mainstream media, and I can't do it. I listened to it for 5 minutes. They don't say that these things, the charges for Manafort, happened 10 years before he ever joined the Trump campaign. Everything is spun. The narrative is spun so that it is made to look like it happened while Manafort was working with Trump. Everything is spun that way. The lack of reality, the lack of objective facts, the amount of spin and political hacks is so bad. It's the average person, and the average person is struggling, to put food on the table, pay the bills. And so if they watch regular mainstream news, and they believe that stuff, they're in trouble. They're not understanding reality. And that's why I think, guys, in 15 years or less, I hope I'm wrong about this, the U.S. is headed towards a violent ideological civil war. There are people in families. Do you know that girl? Do you follow that girl Ashton Whitty on Twitter? I mean, she's a really smart, hardworking young lady, and she got disowned by her family. It's so sad. It's really so sad. Her parents, because I think her parents, one of them was Marxist and one of them was an Antifa. And because she views the world differently, they don't want anything to do with her. This is the new normal, and it freaking sucks. Okay, well, I'm gonna get off my soapbox here for this rant. So let's go through the listener questions now. If I take breaks, like I said, I'm either taking a sip of water or I'm reading the listener questions. I will repeat them out loud, the ones I answer. MC, have you seen the New York Fed's new Twitter account recently? They're posting cutesy little biographies of the interns there. Ridiculous. Man, nothing surprises me anymore. I mean, the St. Louis Fed was tweeting about FedCoin and stuff like that. I did a short video on this earlier in the year. Nothing on Twitter surprises me anymore. I mean, no one can see my tweets anyway. Well, a couple of you guys can, but most of my Twitter followers, the ones who haven't been removed, don't even see my tweets anyway anymore. Everything's spun. It's all soft mind control, where it's kind of like the way the level of propaganda is, it would make like the Soviets with Pravda and Goebbels proud. It's just repeated over and over and over again. And the average person who is not an independent thinker, they don't stand a chance. It's really sad. Okay, water sip. Okay, Phil Kennedy Financial. What's your favorite podcast and why is it Kennedy Financial? Phil, I should listen to your show more, man. I'm really sorry. I don't have the chance to listen to it all the time. My life is kind of a mess right now, unfortunately. I'm trying to find more reliable income. If I had more reliable income, it would solve a lot of my health problems as well. So I do like Real Vision TV. If you have the $180 per year, that is worth it. If you're very sophisticated, Macro Voices is good. If you're a beginner or intermediate, Macro Voices, you're not going to do well with that. Let me think about some of the other podcasts, and I'll get back to you. I actually, Phil, spend a lot of my time reading audiobooks now on Audible. So if you don't have a lot of money, a good investment in your financial education is an Audible account. So for $15, I think you get one new audiobook per month. And then you get discounts and sales. There's really good sales for members of Audible. So I would start there. So if you want to learn, you commit to learning, and you think that ultimately in the long term that you can eventually beat the stock market and you don't have to learn anything and just buy a stock market index. If you actually want to commit to learning, I think Audible is a good way to go. There's also great biographies on there. I actually just read a very interesting book called Men on Strike. I don't want to talk about it on this podcast here, but I thought it was very thought-provoking. It was written by a libertarian female psychology professor. So that was an interesting book called Men on Strike. Rohit Perchuri, do you think investing now in gold is a good time? Or since the market is bullish, it is not recommended to invest in gold? Well, Rohit, this is not financial advice, but it would really depend on how long you're willing to wait. So if you need investing returns in a month, if you need positive returns in a month, probably not a good idea on gold. At some point, gold's going to have a big rally. The timing of this has not worked. I've interviewed lots of smart people, and they've been wrong. Okay, gold's not in a stealth bull market. Whoever's saying that is wrong. Okay, they're wrong in the short term. We'll have to see more evidence that the bear market will end. There are good gold stocks. It depends if you're buying physical metal. It's not investment. I don't view physical metal as an investment. If you're buying physical silver and physical gold, it's just an insurance policy. It's a cheaper insurance policy than going out and buying, like going to MetLife or life insurance or something. It's a version of an insurance policy. It's for insurance and wealth preservation. Some people buy gold and silver coins and they hope to just give them to their kids or grandkids as inheritance. But it's not investment. And the way physical gold, it depends where you live, Rohit, but the way physical gold and silver is taxed, it's not taxed favorably, especially in the United States. In certain countries, I think in Canada, I think gold and silver physical metal is taxed favorably. I remember talking with someone that he did not pay any capital gains taxes for buying and selling silver. So I'm not sure if that's still the case in Canada. It may have changed, but that was the case around 2010-ish. Okay, Thomas Partridge question. Do you think when stock buybacks peak, stock market could tank? Less liquidity with less shares being traded. So we haven't seen any signs yet that the share buybacks have stopped. They have slowed a little bit. But unfortunately, part of this problem, besides central banks manipulating interest rates lower, the other problem is bottom up, and it's the way that board of directors have decided on publicly traded companies to compensate their CEOs and executives and management team. So that has to change too. So that there's different ways depending upon how you want to do that. So in the past, certain partnerships that were publicly traded, it wasn't publicly. Goldman Sachs wasn't publicly traded then. It was a partnership, but it wasn't publicly traded. Okay, so certain publicly traded things, directors would be liable for losses. So they had their own money at risk, and they could be liable. So if there were bad investments and fraud and accounting fraud and all this stuff, the CEO or board of directors could go to jail. And that's no longer the case. The other way, so if you put the executive compensation where there's liability for fraud and those things, that would fix things. The other way to potentially fix things for executive compensation for publicly traded companies is to change the CEO compensation from getting stock options just by beating earnings targets or share price targets or things like that, to changing to long-term revenue growth, new products and services that are created, more long-term value, more research and development, things like that. Okay, so that would have to be something that would have to be changed. There are a few companies here and there that are doing that, but overall, most publicly traded companies are not doing that. Okay, until that changes, combined with the artificially cheap share buybacks, that goes away, this game is going to continue. So the other problem is executive compensation, and I highlighted why. Let me look at some more questions. STC eGolf. Well, there's problems buying the VIX. So the VIX ETFs are bad. I've interviewed people like Eric Townsend, hedge fund manager, and host of Macro Voices, talking about this, warning retail investors should not buy the VIX ETFs. These things are leveraged, and there's tracking error, and they fall. So even when the VIX spikes, the leveraged VIX ETFs they fall. They don't go up. So they could potentially blow up or go to zero. So if you're a more sophisticated hedge fund level trader or institutional investor, there are options for you, I think, in futures contracts, but the VIX ETFs are not ways you should play that. This is not financial advice. This is just my opinion. There are ways to set up VIX-like trades with puts and calls on stock market ETF, index ETFs. So on the NASDAQ, you could buy puts and calls, leaps, or out of the money puts, stuff like that. There's ways to set up trades on that for volatility, up and down for the different stock market index ETFs. But actually going and buying the VIX for a retail investor or messing around with those leveraged VIX ETFs, you can't mess with those. Again, not financial advice, just my opinion. Force majeure question. Crypto prices going up could be in part from people in the emerging markets wanting to protect their wealth. Yeah, I think there's a lot of flight capital. So supposedly search results for Bitcoin in Turkey, they went up more than 40% in a week span. So you have that. Venezuela, crypto has done very well there. Although there's been articles in the past from Reason that if you go try to build a large-scale crypto mining operation inside Venezuela, that the secret police have confiscated it for themselves. So, but people are using crypto. It is saving lives. And so in your Argentinas, your Venezuelas, your Turkeys, and other emerging markets, there is more, let's say, more people taking the risk out there saying, you know what, I cannot hold my local currency. I could lose a lot. I could be a victim of a devaluation. A lot of people in the United States are not used to that type of stuff. If you grew up here in the United States, your devaluation has been done slowly, so most people don't even notice. And then plus, like I've said ad nauseum in the past, when you're the victim of shrinkflation or stagflation and you're getting less for more, you're getting less value with your money in terms of goods and services, less purchasing power, and you're having to provide more fiat currency, a lot of people unfortunately blame capitalism. Even though in order to survive, those businesses have to either reduce the portion size, they have to protect their profit margin. There's an old saying in business, if you read a lot of business books or entrepreneur books, you will eventually find the saying, if you do not have a profit margin, you cannot have any other mission. So you don't have free cash flow, you can't pay dividends, you can't do share buybacks with free cash flow, you cannot donate any profits to charity if you do not have a profit margin. Well, unless you're a technology company. If you're a technology company and your story's right, if you're Tesla, you can have a $60 billion market cap and you can do whatever the hell you want. This is, unfortunately, right now, guys, the tech sector is just ridiculous. And that's why I have that economic cartoon there that you're seeing right now, with the tech laser beam trying to zap the bear. It's really hilarious. Yes, capital flight, exactly. Bill Novitsky comment. I bought the miners today. New Gold, Nova Gold, another one I don't recognize the symbol. Hopefully this is a turnaround. Well, it's in my opinion, it just depends how patient you are. If you can read financial statements, look at the balance sheets, see what they claim their all-in sustaining costs is, and then add 20 to 30%, and then check to see how much debt the company has and when it's due. If they don't have too much debt, you got to go through the financial statements. It's normally disclosed in there by the lawyers about potential company risks or bankruptcy, and I'll say the debt, how much debt they have, and when it's due. They have to disclose this stuff. It's just they normally don't disclose this stuff in the normal areas. You have to look in the footnotes or in a lawyer paragraph that discloses all the risks. It's in the annual report or the quarterly. Alex Grant. Okay. You mentioned an unavoidable reconciliation to value in the next 1 to 2 years resulting from bank failure, credit event, etc. Do you think Rickard's road to ruin scenario would happen where all dollars are frozen? See, I don't know if every government and every central bank and every large bank can coordinate to do this. It'll be interesting to see if they try. So, if they don't coordinate this, and a couple of the countries try it, the money could leave and it'll go somewhere else. And this, if you go back through financial history, this is kind of what happened to the United States prior to the October 1929 crash. So a ton of money was coming in to the United States from Europe and England prior to the October 1929 crash, Black Tuesday. There was a ton of money coming in. Things were really ripping. 2020 Cool Cat. At what point does hyperinflation overflow into cryptos, or will it? Well, I don't know if it's going to overflow into all the altcoins. I think there's too many altcoins already, but I'm sure there's technology experts that would disagree with me. As someone who believes in free markets and Austrian School Economics, you know what, let them all compete. I would just tell people out there that if you have money that you cannot afford to lose, you should not be buying cryptos. So those the riskiest part of the cryptocurrency markets are a lot of those altcoins and the initial coin offerings. And if you do not want to take risk, I would stay the hell away from those. Stay the hell away from those. But I mean, I've talked about this in a lot of different podcasts, guys, that there's an argument to be made that there's already been hyperinflation in asset prices. The amount of money and credit that's been created since the 2008 financial crisis, in my opinion, I may do a short video on this towards the end of the year with PowerPoint slides itemizing some of the different numbers. But in my opinion, I think over $65 trillion in money and credit has been created since the 2008 financial crisis. And a lot of that money has not really gone into the real economy, although a lot of it's gone into real estate in China. But a lot of that money has gone into, well, it's also gone into real estate in other major cities. But a lot of that money has gone into asset markets. So stocks and bonds has kept bond prices. Bond prices are ridiculous. I saw it on Daniel Lecallier's Twitter yesterday. There's still over $9 trillion globally in negative interest rate debt. So who's buying that debt? If it's not just central banks, there's other people buying it. I don't know why. I wouldn't be putting my money in debt and then paying someone to park my cash there. I don't think that's smart. Chrono Trigger fan. Most of these assets are pure vaporware. Do you mean all assets? Do you mean stocks, bonds, commodities? What do you mean by assets? Are you talking about the altcoins? Are you talking about the initial coin offerings? What are you talking about? A little bit more specificity, unless you mean all the assets. Spokose. I think I just screwed up your name. EFP is nothing more than the COMEX and the LBM exchanging emails that both put into their respective shredders. That's a good one, buddy. That's a good one. Well, I mean, so here's the thing about the gold and silver market. So if there was a lot of people in the WTF just happened episode that Eric and Dave did last week that were commenting that, you know, the gold and silver manipulation, gold and silver are never going to be allowed to rise. They're 100% in control. You guys know, I've laid out this argument now for a while, that this is a price control, but it's not a full price control. It's a soft price control that defends prices at certain levels. But eventually, you run out of metal to be produced by the miners at those levels, and then the people in power realize this. So this is kind of a soft price control. Because if it was a hard price control, and they were 100, and the bullion banks and the central banks were 100% in control of gold and silver prices, then why did they ever allow gold prices above 1,000? Why didn't they just never smash it below 1,000 permanently? Why did they allow silver prices above 10? And the answer is simple: because they still need some metal. And at $1,000 an ounce gold, most of the gold miners would be bankrupt. Even the low cost ones were, if gold prices stay that low for a year or two, they would be in big trouble. And the answer is because maybe 10, 15, 20 years ago, there was plenty of gold and plenty of silver at gold, where the miners could make a profit at gold $1,000 an ounce and silver at 10, but most of that metal has already been pulled out of the ground. And my argument is, if there wasn't a ton of silver byproduct, there would already be silver deficits, okay? There would already be super silver deficits. That silver byproduct is allowing the silver price to be capped for now, because the primary silver miners are in big trouble. There are primary silver miners, guys. We're in an hour, 10 minutes, but I'm going to take the time to answer more of your questions here. The primary silver miners, there's the higher cost ones. Some of them are losing $1 or $2 an ounce now, and they've sold their assets. A lot of their they call them non-core. So if you go back and listen to the conference calls for the last couple years, or you look at the investors' presentations or the quarterly reports or the annual reports, a lot of the higher cost primary gold miners and primary silver miners have sold a lot of their non-core assets. So basically the stuff that they owned that had any value that wasn't making them any cash. Even some of the stuff making cash, if it was a royalty or a stream that they owned that they considered non-core because they're not a royalty or streaming company, they've already sold that. I'll give you a case study. Coeur d'Alene sold, I believe, for around $70 million in cash. They sold their royalty and stream portfolio to Metalla, which is a smaller royalty and streaming company. I don't know the market cap offhand, but Metalla paid around $50 or $60 million, maybe even $70 million in cash for the portfolio. And so in the short term, that helped Coeur d'Alene with their balance sheet. Coeur d'Alene's a higher cost gold and silver miner. But a lot of these primary silver miners over the last couple of years, you guys seen this in the short videos, I'm the only one talking about it, they have had to buy a lot of producing gold mines to help their margins. Because if they had only owned their primary silver mines and they had not bought those gold mines the last couple of years, their margins would be so bad now, they probably would have already went bankrupt. So their gold mines are actually saving them now. But I don't know how much longer they can stay afloat for. So the example in the real world is when you have a lot of debt and you just lost your job and there's a minimum amount of money you have to spend on food and healthcare and all this other stuff and gasoline in your car or whatever. There's only so many things you can sell and liquidate before figuring out new ways to, go out and get new revenue. But there's only so many things that you can sell to raise cash to pay off your debts, to buy yourself time from bankruptcy, etc. And the miners are in this situation. The miners things have been bad and gotten worse for 7 years now. And we have had, we did have the bear market rally in 2016. A lot of miners did sell a lot of equity. They raised some capital. But, the rally didn't last that long. Force majeure. I would not buy Bitcoin at a Bitcoin ATM and then sell it because you're paying a huge premium. I think it's 20 to 30% higher. I would avoid that. Unless you're willing to overpay. Potentially what I've heard is at a lot of those Bitcoin ATMs, there's a lot of people laundering money through those. A lot of shady folks at those Bitcoin ATMs that are laundering money, and they don't care if they pay an extra 20 or 30%. I wouldn't do it. Chrono Trigger fan. Yeah, I think that's good analysis of Bitcoin. Below, even at 5K, Chrono Trigger fan, that's a Bitcoin price where the marginal Bitcoin miner is not going to make any money. So for the short term, for maybe a couple months or a couple quarters, maybe even a year, Bitcoin miners could maybe tread some water if their balance sheets are not too bad. But I don't know. At a certain point, we're going to find out. We're going to find out if Bitcoin is a legit market or not by whether or not the miners, whether they quit verifying transactions or some of them go bankrupt. We're going to find that out if Bitcoin doesn't start going higher soon. But in my opinion, Bitcoin is bouncing around the marginal cost of production now. So sometimes it's lower, sometimes it's higher. It's going around that number. And go back and maybe I'll try to get Frank Holmes on again or some other Bitcoin miner. I tried earlier this year to get the head of Bitcoin mining from MGT Capital, and things didn't work out. Unfortunately, the business deal that I was going to do that blew up in my face was with two people involved in the Bitcoin space, and they were supposed to help me with some booking one of those interviews, and they didn't book an interview with the head of MGT Capital. So I'll have to go around them to talk to some people because I'm not sure if they want to talk to me anymore because I walked away from them. They tried to rip me off in a business deal. Okay, a couple more questions here, guys. We're in an hour 15. So I don't want to spend too much time. My voice is starting to get sore. I'm going to have to take a Ricola after this. Force majeure. The problem with cryptos as a speculation is that Bitcoin has a huge percentage of the market over other cryptos, which suggests that the crypto market is not healthy, no healthy competition. I'm not sure I agree with that because if we do start to have prices moving again, the other altcoins, you're gonna have YouTube pumper channels, and you know what? The regulators, the investigators should be going after the guys making ridiculous predictions about Bitcoin and these altcoins. I don't think any of them got in trouble. And you know what? They were paying, most people don't know this, but they were paying to promote their YouTube videos too. So the ones that got like 100,000 views or more, a lot of those guys were paying like $500 or $1,000 or more to promote those videos too. And that's how they built their YouTube channel so quickly. But those pumper guys who were making ridiculous price predictions, they lost people a lot of money. And yet, me telling truth and interviewing experts, the Virginia State securities investigators are going after me, my podcast, and I'm not even that big. But my point, force majeure, sorry, I need to take a swig of water. My point is that if we do have a big rally in cryptos, the altcoins are going to go crazy again. The initial coin offerings in countries that haven't regulated it to death are going to come back. And you're going to see hundreds of those crypto pumper YouTube channels. And I haven't paid much attention to the crypto pumper YouTube channels. I'm not sure if they're still there, but there was literally hundreds of them at one point. And they were paying, they had grown their YouTube channels in a short amount of time because they were doing dishonest and unethical stuff. And they were spending like a lot of money to promote their YouTube channel and promote their YouTube videos. They had grown their YouTube channel in way larger than mine. And my content's better overall. But, because nowadays everyone's myopic, short-term rent-seeking, people want to be sold the idea that they can get rich quick, those channels became popular. But in my opinion, the SEC and the regulators should have went after them. If they're going to go after anyone. Not that I like bureaucrats, but if they were going to go after anyone, there were tons of these crypto pumper videos. Oh my God, some of them were awful. Actually, most of them were awful. Force majeure. Do you think that Trump will shake up the Fed? Well, he can still bring on a couple more people to the Fed, but I think that's about it. I think Trump knows he needs the Fed. Trump loves debt. Trump has spending projects. Trump has infrastructure projects. Look, Trump has made promises that the U.S. is going to be improving its infrastructure. So we haven't heard about that in a while. I think the Fed's going to have to finance at least some of that. Maybe he goes after some retirement accounts and asks people to contribute 1 or 2% of all their retirement accounts to infrastructure bonds or something. But there's a big problem here in the U.S. The money, look, man, I'm not in favor of central planning, but there are huge problems in the U.S. with bridges and roads and other things. These things are decrepit and falling apart and dangerous. The money, if it should have been spent at all, should have been spent on infrastructure and, bullet trains and stuff. I would prefer that the private sector do this, but no one seems willing to want to do this, unfortunately. I mean, there's been, like I said, there's been tens of trillions of dollars created out of thin air since the 2008 financial crisis. That money was used to save the banks, make the banks profitable again, cover up fires in credit markets and the over-the-counter derivatives markets, and bail out foreign governments, foreign central banks, large foreign banks, etc. And I would have, as an American citizen, preferred that money instead. I don't like central planning. I'm for limited government. I want the Fed ended. But if the money was going to be spent, I would have preferred it been spent here in the United States on infrastructure and stuff. But I don't have a say in things. But, I think there's a lot of people that are joined together, and they're going to want to, the people at the top, the economic and political elites, and they're going to want the next crisis, they're going to probably want the same thing done again with what we found out from the one-time partial audit with Ron Paul and the Fed. Grumpy Troll. Okay, your comment just... Oh, man, the comments just moved. Okay, here we go. Okay, the comments are coming in too much. I'm really having trouble reading them all. There's too many. Okay, Jason, I'm a longtime subscriber, stacking assets. I'm also an underwriter for a large regional bank. Uh-oh, you better... Good thing you're using a fake name, buddy. They find out you're on this podcast, you're going to get blacklisted like me. You'll never get a job in the financial industry again. We're seeing a slowdown in quality applications. Do you have any thoughts on the current housing bubble? Well, I think the U.S. is becoming a renter nation. I think a lot of foreigners are going to end up owning the real estate. I mean, we're already seeing that. There's tons of European money, tons of Chinese money that has come into the U.S. The U.S. is becoming a nation of renters. I can't remember where I read this, but Europe, supposedly 60% of all citizens in the European Union are renters. They don't own. And that's what the U.S. is becoming. It's being gutted out. So especially people in my generation. Have you guys seen the surveys for my generation are totally ridiculous for millennials and Generation Z. So people in Generation Z are quitting their jobs. Even if they got a good job, they're quitting their jobs to go travel because they don't want to work too much and they want to have a fun life. But in the surveys, they're saying that despite them quitting their jobs or walking out of job interviews where they could have landed a good job, they still think that they're going to end up with more money, more retirement savings, and a better house in the long term. Oh, thanks, Alex, for the tip on the super chat. I appreciate it. Pat, I already gave the stupid disclaimer, unfortunately. I've given it a handful of times, so I have to keep giving it, man. You heard the story of what happened to me. It's total BS. But look at the new normal that we're in now. Look what happened recently to True Pundit, the guy who's True Pundit. Are you guys familiar with what happened to Cheryl Atkinson, what the Obama administration did to her? If she wouldn't have had her intelligence, she's not even Republican or Libertarian. I think she's like more centrist. And they had like stuff spying on her computer, and she wouldn't have even found this out. It's crazy. It's crazy now. Like it's soon in the U.S. Like they're. Oh, the last thing I wanted to bring up for free speech. So like I know a lot of you guys have mixed views on Alex Jones, especially our Canadian listeners. But sometimes Alex Jones has amazing guests and content. And in 2015, he had Matt Drudge on of the Drudge Report. Go back if you have not already done so and watch that 45-minute interview. Drudge was so scared he would not go on the interview, would not have his face filmed. And so Drudge brought up how a U.S. Supreme Court justice came to him and told him straight up that if Hillary Clinton won the election in 2016, that they were going to start shutting down people on the internet, on social media, and potentially eliminating free speech, like charging people with crimes and throwing them in jail. And it looks like despite Trump winning, because he has not cleaned up the Department of Justice, rule of law is not reestablished in the U.S., because Trump has not cleaned this up, that the social media, big tech and big social media are still continuing on with the plan. And Alex Jones was one of the first people with a really, really large audience to back Trump. So that's why he was one of the first people picked off of the internet and social media. Because without him supporting Trump initially, I'm not sure Trump would have won. I'm really not. Because Alex Jones, with how big say what you want about him, but because his audience is so big, he was one of the first major supporters of Trump. And that got Trump opened a lot of other doors for marketing. Okay, guys, well, we're almost to an hour 30. I'll answer a couple more questions. My voice is starting to go out here. There's just tons of questions. I don't have time to answer them all. But I want to thank you for whoever else has tipped in the super chat. Alex, I see you tip me, so thank you. And all my other Patreon contributors. Hopefully some of you guys will step up. Some more of you guys will step up. $5 penny. Silver will buy lots and lots of food. Correct. But it's not an investment, though. physical silver is insurance. It's protecting your purchasing power. And man, my grocery bill, I don't even eat more food. I eat actually less, but it seems like in the last like 8 to 10 years, the prices on food, like at the grocery store, are so much higher. Oh my God. The cost of food at Target, the grocery store, normal middle class mainstream restaurants and grocery stores and stuff, the cost on the food is up insane. Wow, $5 penny. I don't know how you're making all these comments so quickly. Either you're a master typer or it's typing how you talk. Oh, thank you, Alex. I appreciate that. You're welcome. Okay, guys. Well, my concentration is running dry here. There's just so many questions. If you guys want your question answered, you can either bring it up in the next live stream I do. I'm not sure when that's going to be. Or you can put it in the comment section after this video is fully recorded. You can put it underneath the video and outside of the live chat, and we can continue the conversation there. But the bottom line is, in the short term, the stock market will almost definitely go higher, but it will not be fundamentally driven. But, maybe around when the Federal Reserve comes back, when the Wall Street guys come back from Labor Day, their long holidays in the south of France or the Hamptons, when they come back with their own money and it's not just trading computers, they may decide and look and say, you know what? The Fed's hiking rates. Something's going to break. You know what? The Fed's ramping up QT, quantitative tightening, aka selling assets on their balance sheet. They've already sold over $250 billion in assets. They're going to be selling $50 billion more per month. I think the market would have to see the results that the Fed has already started to sell 50 billion, 100 billion more in a short amount of time. And that would maybe signal that the stock market's going to have a correction. But, maybe it'll just shrug it off. Because we're kind of in this stock market now where bad news is good news. Okay, if there's bad news, the Fed will just do more QE. Good news is good news. And so basically, anyone who's been short a lot of stocks has really lost. Now, maybe if you've found some of those companies that, obviously, if you've been short Tesla, you haven't done very well. But there are other companies that are not as big as Tesla, that are not doing as much accounting fraud or other stuff as Tesla, and there's not as many crazy religious people that are long the stock of Tesla that believe in Elon Musk, that think he can save the world. But there are companies that are lagging, as I told you earlier, that only 2 out of the 11 S&P 500 sectors are making higher highs. So there are companies. Frank Curzio, in his interview last week, he said those companies potentially are buys. I don't know. I would have to, as a value investor, I would have to go look at the company and tell you if the company's doing good, if their market has good long-term growth prospects. But, just because they look undervalued doesn't mean it's a good company. Okay, guys, well, that's it for now. I really need to sign off now, take a break. I need some more water, and I need to go lift some weights and relax for the rest of the evening. Hope you guys like this live stream. Take it easy for the rest of the evening.